morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, March 17th. Happy St. Patty's Day to everybody. We are in the process of looking that we may have put in a local bottom in, which is right over here on the spider. So I want to go through the daily charts. We did the top-down approach on the weeklies yesterday to the dailies. I just want to kind of focus on the daily chart. But I have to tell you, we have market divergence continuing here. We have some indices of the 5 that we follow are doing much better than others, and some of them are our leaders and some of them are the laggards, but nonetheless we need to pay attention to that, because what happens is either we get everything in sync together and start really humming on all cylinders, or the markets start to break down and one of the leaders that start breaking down will take the other indices with it, and again along with the market. Now there's a few things that I do want to speak to you about, and we're going to go over, and that is some of these seasonal trades that we're looking at. Now, there's a few things. Energy, number one. I had mentioned that a few weeks back. I haven't covered it in a while, only because there was no real action going on. But now that we broke the interim low, I do see probably a flush into the 40-ish, even an overshoot of maybe 38. However, that's going to be your opportunity to start looking to nibble in, and I'm going to tell you why. A lot of the bigger player oil and gas companies are actually doing okay. Yesterday, they actually held up support. Now, one day does not make a trend. However, it's something that if you are looking to get involved in some of these energy plays, I think it's a great opportunity. I think this poses a great opportunity for investors and even longer-term players. Even if it's a shorter term swing, maybe 6 to 8 weeks out. Energy comes into some seasonal strength now. We also have utilities that come into seasonal strength, and natural gas. So even if you wanted to play it via the XLU, that would be the utilities. The UNG would be the ETF, the natural gas ETF, which also you have to keep in mind, though, it does have contango, okay, where the manager has to readjust the ETF portfolio pretty much every day. But you have that rollover in the natural gas contract. You have to be careful with that, okay? But then again, you have USO, which is also the tracking ETF, oil tracking ETF. Anyway, but take a look at the COP, the EOG. I do like ConocoPhillips has some Canadian exposure. EOG is also another great little play. And then if you want to do some oil tracking with the oil, you could do the USO. There's a couple of good ones out there. Halliburton, HAL is actually a real nice little play, breaking down from in the basically cut in half. So that's what I'm going to be looking at in the next few weeks. And then again, once we see some signals in, I'll post them on the chart going forward. But let's take a look at the indices now. You can see that we have the SPY. And we did come in right into that resistance area here, that little double top where we failed back in December, and now we're coming into this play now. Now the pre-market were again a little bit red, but really not much to worry about. This had a beautiful outside day, but watch this. You take a look at the Qs, also had an outside day, but it's below the 20, okay? And that's something that again is a great price action that we took out the previous day's high. That's great outside day reversal. That also tells us that we had some new order flow, people encouraged to buy at these areas. Okay, that's also a positive. Then you have the diamonds, which really didn't do much of anything yesterday, so that's not a good sign. It is a lagger of the 5 indices that we follow, but nonetheless, it did not break to the upside and cleared yesterday high. The previous day's high. We are still below that 20 as well. Right, now you look at the transports. Now, the transports is our main leader, and that looked fantastic. That broke out back to the upside, and that looked excellent yesterday. And again, when the transports are moving higher, usually the Dow starts to take shape as well, but that did not do so yesterday. So that's just something that's a little bit of a concern. But nonetheless, the transports did well. And then you have the IWMs, which is our secondary leader here, and that had an inside day, and actually was very weak pretty much most of the day, and it was not a great trader. This has not been a good trading vehicle at all in the Russell at all. I mean, you could see back from November we have gone nowhere, and we just broke out a little bit. Now we're coming back up here. Now we do have a higher low, right, from this previous low to this previous low. And now we made another little higher low from this low here. But we need to clear this. We need to really take this out Okay, once we take this out, then I think the market will actually run pretty hard to the upside. Okay, now are we still extended? Yeah, we are extended. Relative to what the PEs are in the marketplace, I just can't see when people say the pundits say that, oh, the markets are at they're still cheap to buy, and I would buy. It's just, to me, it's just crazy. Without an 8, 10, 12, 15% correction in the last 4 or 5 years, you'd have to be crazy to actually start adding to positions up at these levels. I do feel that there is a correction in the win. I have no idea when. Unfortunately, I'd be lying to you if I did. But look, we thought we would have a correction last year and the year before, and that never happened. But you have to be careful now, because when they start talking about raising interest rates in the beginning, it is a shock to the market, but it's actually a very good thing in the long run, because obviously the markets are humming. The economy is humming on all cylinders. So that's actually will be a good thing. But when that market does start to sell off, that's going to be the opportunity to buy stocks. Not here, not now. Okay? We have a 2-day Fed meeting, guys. We have today and tomorrow. We want to see what they talk about interest rates. Of course, they're a crazy little language that they put out there, and let the pundits dissect it. And then let's see how the markets react to that news. Okay? Have a great day. Be careful out there. Happy St. Patty's Day. We'll speak to you tomorrow.